Hello and welcome to the Weekly Forex Outlook at xm.com. Next week, 4 central banks will be in the spotlight as they announce their policy decisions, including the Fed, the Bank of Canada, the Bank of England, and the Bank of Japan. What will these decisions mean for their respective currencies and for the markets more broadly? I'm Maria Pachurdes, and joining me to unpack all this is senior market analyst Haralambos Pissouros. So Haralambos, starting with the U.S. economy, the disappointing jobs report for August prompted investors to increase their Fed rate cut bets. Can you tell us more about that and what we can expect from the Fed when it meets next Wednesday, as well as the reaction in the dollar?
Hello, Maria. Yes, indeed, following the disappointing jobs report, investors added to their rate cut bets, and the slowdown in producer prices came in to corroborate that view, despite the slightly hotter than expected CPIs. Now, investors are expecting 72 basis points worth of rate reductions this year, with the first 25 basis points cut expected to be delivered at Wednesday's meeting. There is even a 7% chance of a double 50 basis points cut. Now, back in June, the median dot for this year pointed to 50 basis points worth of additional cuts, but there were 7 members favoring keeping rates untouched until the end of the year. So it will take a major shift for policymakers to even match the market's dovish expectations. However, if indeed they appear convinced that more rate cuts are needed, the US dollar is likely to come under renewed selling pressure. What may also attract special attention as we approach the end of 2025 is the median dot for 2026. In June, policymakers saw 1 additional reduction to the 2 projected for this year, which comes in huge contrast to the market's view of another 3 rate cuts in 2026.
Turning to Canada now, back in July, the Bank of Canada kept interest rates unchanged at 2.75%. What data has come out since then, and how might those figures impact the Bank of Canada's decision and the Canadian dollar?
Back in July, the Bank of Canada stood pat and cited as a reason the resilience in economy. However, since then, economic data proved them wrong, with the labor market losing a cumulative of 106.3 thousand jobs in July and August, and also the GDP for the second quarter pointed to a 0.4% contraction. So, despite the stickiness in underlying inflation metrics, the economic weakness has led investors to turn dovish, assigning an 85% probability of a quarter point reduction at this meeting, and nearly fully pricing in another one by the end of the year. So, if indeed the Bank of Canada cuts rates as expected and sounds more dovish than in July, due to, of course, the deepening economic wounds, I believe that the Canadian dollar is likely to extend its recent slide.
Moving over to the UK now, the Bank of England reduced borrowing costs to 4% in August. What can we expect from the bank this time when it meets on Thursday? And how might the UK CPI numbers for August, which will be released on Wednesday, impact the BoE's decision?
Recently, Bank of England Governor Bailey said that there is now considerably more doubt about when exactly and how quickly they can proceed with more rate cuts. And this allowed investors to price in the next 25 basis points rate cut in March 2026. So no action is expected next week, and such a decision will come as a surprise to no one. However, due to last month's close call, the voting pattern of the decision could prove market moving for the pound, as even a couple of officials voting for a rate cut could prompt investors to bring forward the timing of when they expect the next rate cut, and this could thereby hurt the British currency. Now, the CPI numbers on Wednesday could very well impact how policymakers will vote the next day.
And finally, in Japan, the Bank of Japan will deliver its decision on Friday. Undoubtedly, there has been a bit of political turmoil following the resignation of Prime Minister Ishiba. Who is likely to be Ishiba's successor, and how might that impact the Bank of Japan's moves going forward and the yen?
Yes, following the resignation of the Prime Minister, there has been speculation that he will be replaced by someone who advocates for looser fiscal and monetary policy. And thus the probability of a quarter point rate hike by the Bank of Japan this year fell to below 50%. However, investors were quick to recalibrate their hike expectations following a report that the Bank of Japan maintained the view that it may be possible to raise interest rates again this year despite the political turmoil. Now, although the bank is widely anticipated to stand pat this time, investors are now expecting a 60% probability of a hike by the end of the year, while they are fully pricing in such a move by March. So if policymakers remain committed to take borrowing costs higher, I believe that the yen is likely to gain. However, delivering a clear message of what will happen in upcoming meetings may be a difficult task. The Liberal Democratic Party will hold an election on October 4th for Ishiba's successor, a choice that could prove influential for monetary policy thereafter. One of the strongest candidates for taking Ishiba's place is former Economic Security Minister Takaishi, who is seen as pro-monetary easing. Therefore, anything suggesting that the Bank of Japan will proceed at a slower pace or even dismiss future rate hikes could indeed prove very negative for the Japanese currency.
All right, Limbus, thanks so much. This was the Weekly Forex Outlook here at XM.com.